And if you don't sustain and you start to uptick, you're headed for a triple top breakout. And I think that's what silver's setting up here. Watch gold that will cause the Fed to, not openly and publicly, but to quietly, behind the scenes, panic.
Silver is primed for a massive breakout, and Michael Oliver has the inside scoop. With the silver to gold spread at a tipping point, could we see silver explode higher? The charts are setting up, and the banking sector might just ignite it. In this video, Michael explains why silver's next move could catch everyone off guard. Stick with us. You won't want to miss this.
The silver-gold spread has been trying to break out, as has the gold miners versus gold. In other words, when you plot the spread chart, and we do it like weekly in our reports, there's certain levels. If you can get GDX up to a certain level versus gold, it's going to break up a couple-year downtrend on the spread and say, okay, I'm back. Okay. Silver has a similar situation, and you're right, we're literally in the gutter historically in terms of price. So either we're totally wrong and silver is no longer a monetary metal, which I don't think is the case. And by the way, if you go back, for example, over the last year, for let's say March of 2024 to the close of last month, silver went up, the commodity index went up a slight amount, I think, during that year, a couple percent. Silver went up almost as much as gold on a percentage basis over that 12-month period. So silver was moving with the monetary metal, not with crude oil, which is laying, on a floor for the last year, or copper. It was behaving like gold. And suddenly for this week, it's not behaving like gold. I think that's a mistake. Silver is the little puppy on a leash held by gold, okay? And I think right now it is in a slingshot position. Yes, there may be slightly lower lows next week, but I'd be watching right now for any sign of an upturn. There's another reason, technically. I used to keep point and figure charts, people, the X's and O's, where you get upticks, you get downticks. Silver never tops with a double top. Well, we made a high at 35 back in October. We had a drop down to 30. So you had 4 downticks on a $1 chart. Then you went back up to what? 35 last month and this month. You put the upticks back on the board to 35. So you peaked at the same level you did last October. And now you've downticked again to 30. Almost traded 29 today. I actually want to see it trade to 29 and take out that last low. So people then pull their hair out. So, oh my gosh, it's no good. Because on a point and figure, when you do that, you set up a double top and take out the column low. Pardon me if I'm being academic here. And then you start to uptick. What it was a bear trap low, meaning you went down and took out the last low to spook people. And if you don't sustain and you start to uptick, you're headed for a triple top breakout. And I think that's what silver's setting up here, is a compression situation where it flushes everybody out without the help of gold. Like gold's only dropped 3.5% and suddenly turns and burns. And so I think watch gold. I don't think it's going to do what the stock market's doing or what silver's already done or what commodities have done. It's hanging in there pretty tough. And I think that says something. And I would focus on the banks because we know that that's the arena that will cause the Fed to, not openly and publicly, but to quietly, behind the scenes, panic. And probably even have a cut or QE instituted even before the next meeting. I think it's been happening ongoing for the last several months where early money has been moving out of an asset category they deemed to be too high risk, too low reward, even though it hadn't dropped at that point, January, February. The money was starting to move. That's why miners, for example, shot up substantially over the last several months. In fact, XAU index and GDX, the ETF, if you look at the last 3 years of action since 2020, they blew that stuff out. It was a ceiling. And yeah, you pull back slightly below it, but you closed last month substantially above it. And I'm going to bet by the end of this month, you're still substantially above that range that prevailed back to 2020. So their price action has just woken up. And I think that more of that money will flow into the miners, especially as the perception hits that this really is a bear market in stocks. The talk of correction is starting to get a little wobbly right now. Well, if you look at the mama market, gold, right now, as we speak, it's trading 3.5%, okay, off of its high daily close, which occurred a week ago. Well, it's down 3.5%. Okay. Stock market was, look at, bank sector, stock market, and silver and commodities also going down because, we're going into a depression or something. Well, we might be, frankly. But there's a couple mistakes there. One is the assumption gold goes down with the stock market. Yeah, it could go down on a couple weeks here and there with the stock market in a sharp situation. But let's go back and look, for example, at that October of 2008 event. That's when the stock market had already been coming down hard for a full year and finally had a puke. Okay, and gold said, oh, okay, I need to correct anyway, so it had a puke. The Fed sat and watched the banking sector implode during the summer. And the Lehman Brothers went under in September of 2008. Stock market collapsed the next month in October. And it wasn't until November that the Fed finally said, okay, we got to do something. They'd been cutting rates all the way down, but they did QE at that point. So right after that October collapse, a full month or two after Lehman went under, the Fed finally woke up, copied the Japanese model, and started doing QEs. November 2008. Stock market, by the way, went down for 5 more months into March of 2009, substantially further lower. But if you bought early in November, right after that October debacle, where you thought, oh, stock's going down, therefore gold goes down, actually, gold stopped and turned and started to explode back to its highs within about 3 or 4 months, had gained from the 600s back to 1,000, like a 50% gain. Not because the stock market turned up, no, because the Fed hit the pedal. And that's what causes gold to move the way it does. Now, right now, if you look at Powell today, they're not going to hit the pedal. He's just going to be academic about it and wait for the data points. I mean, when the blood's in the street, he'll finally see the data points. I strongly suspect that the phone calls between the major banks and the Fed have been increasing at a tremendous rate over the last week or so. Because it's not just one bank, it's all of them. They're going down much harder than the stock market. So everybody's talking about, Tesla collapsed and Nvidia's down hard. Who cares? It's the banks that matter to the Fed. After all, the Fed is the banks, okay? Now, that's why gold's down 3.5%. Somebody's buying gold relative to the rest of the world. And I think that's because they see what's coming. The Fed has maybe learned a lesson since 2008 and learned, hey, we can't wait too long. We can't wait for an actual big bank to go under because then we'll look like idiots. We need to actually do a QE, start buying assets, start buying banking ETFs or whatever, bank stocks or commercial real estate, another implosion area, before it becomes a bloody headline. And I think gold knows that. It knows maybe the Fed's a little smarter now and will implement their aggressive policies real soon. Watch the bank sector. That's the key. Now, the case is silver. Investors are making a big mistake there. Okay, if we're going into a major global recession, maybe a depression, wouldn't surprise me, given the bubble size of the U.S. stock market, the Japanese market, and the Indian market. They're all imploding together. Industrial commodities will go down. Now, they don't necessarily have to stay down because when the Fed puts the pedal to the floor again, that money goes somewhere and commodities are still dirt cheap and we think they're going to go up. But right now they're going down with the stock market. Industrial commodities, crude oil, copper. Okay, they're treating silver not like gold. Like I said, down 3%. Silver's dropped from $35 to $29 almost in a matter of a week or so. It's behaving like copper and oil. Somebody's making the conceptual error that silver's an industrial commodity, not a monetary metal. So just fundamentally, now there's technical reasons for what I'm saying. Just fundamentally, if I were an investor wanting to put my money in monetary metals, knowing that the Fed's going to panic here, probably sooner than they did in 2008, that I want to own monetary metals because paper money is going to be far worth less than it might otherwise be because they'll accelerate the growth in the money supply. I'd look around and I'd say, well, gold's behaving well. Yeah, I'd want to be in gold, but that silver's ridiculous. It's a slingshot situation. It is not copper. It is not crude oil. Okay? It's a monetary metal. And right now, for the last week, investors have forgotten that. And they often make mistakes. Investment crowd often makes excessive mistakes either way. So right now, I'd say we see this pullback in gold and silver as a major buying opportunity. We're looking for the least excuse to define the upturn. And I strongly suspect it won't really take a full 30% crash in the stock market to do that. I think you got to watch the banking sector. If it doesn't behave well real soon, and already it's done so much damage, I don't think it will.
So, is silver ready to break out? Only time will tell, but the signs are clear. Keep an eye on the markets and don't forget to stay ahead of the game. If you found this analysis helpful, make sure to like, subscribe, and hit that bell so you don't miss out on the next big update. Thanks for watching, and we'll see you in the next video.